Art Collins with you. Got another simple system that came out of a simple idea of what is the best number relative to blah that you can come up with in order to do blah. A million ways you can go with that. In this case, if you were to say the nth highest open to close out of a field of blah has to be negative for you to be a buyer tomorrow, or the nth lowest open to close has to be positive for you to be a short seller, then what is N? And also we have to know how big the field is. Out of a number of days, that's what? So two things we have to optimize for. The best number of days in the field, total. Going to give that a value of P. And the best number of up versus down days. That'll be N. What we came up with, according to best return on account, which is what I almost always optimize for, is you want a field of 20. You want to look back at total 20 days. And by the way, the 8:30 a.m. Central Time open to the 3:15 p.m. close is what we're measuring. It's not close to close, and it's not overnight opening to close. 8:30 open to 3:15 close. Out of the last 20 days, if you want to be a buyer and you want to use the optimal odds presented here, you would want to see no more than 7 up days. The 8th would have to be negative for you to be a buyer, and vice versa for you to be a short seller. The 8th lowest open to close would have to be positive for you to be a short seller. So obviously this is a fade indicator. Okay, if you're going to look for no more than 7 days out of 20 to be a buyer, that is a fade indicator. Most of your days were down open to closes. The best variation is that no more than 7 of the past 20 days could be higher open to closes to signal along. And the best variation is that no more than 7 of the past 20 days could be lower open to closes to signal a short. So, set your charts to daily, day session only, 8:30 a.m. to 3:15 p.m. Central Time. If the 8th highest open to close is negative, go long the next 8:30 a.m. daily open. If the 8th lowest open to close is positive, go short the next 8:30 a.m. daily open. And again, we're talking of the last 20 days. Day session prices only. Exit at the 3:15 day session close. So since the start of 2015 through May 21st, 2021, we have $55,000 net profit off 438 trades, 51.83% profitable, $126 average profit, 97.37 worst drawdown. That figure into your eventual net total gives you a 566% return on your money had you started with the 97.37 worst drawdown amount. Corroboration in all the markets. Clearly the S&P remains the best vehicle for this particular system. Highest return on account and net profit. You get some pretty decent numbers though in the NASDAQ also. And again, none of the markets refutes it. Check this out for some other interesting trading ideas and overall market concepts. And until next time, thanks for joining me.